Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 9th of July 2019, so welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, some of the charts that we looked at yesterday. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just a very quick mentioning of our JFD YouTube channel here, to which you can always subscribe to, and in order not to miss any of the videos that we produce. So, and also our research page here on our website, where you can go in and have a look at different analysis that we do on a daily basis. So, yep, I believe that you can find some useful stuff in there. So. Yep, we'll always be happy to see you in our webinars and of course on our website. But for now, let's jump into the charts. Now, the first one I want to touch on here is the FTSE100. Now, looking at this one, I mean, you can see that it continues to slide lower. I mean, after kind of after reaching these highs last week near the 7,620 zone, the index started falling and started moving towards its upside support line. This tentative upside support line taken from the low of the 3rd of June. So in a way, this is what we're keeping a close eye on right now. Looking at the cash index right now, where the we will probably see an opening gap here to the downside. The index is currently sitting just slightly below the yesterday's close, so it's currently sitting near the 7,540 zone, so just about 10 points away from, almost 10-15 points away from where it closed yesterday. And of course, like I said, it kind of puts a lot of emphasis then on this upside support line. If it holds, then yep, that's could be good news for the buyers. We could see this one pushing it up again. But if it starts failing and we see a price drop below the 7,497 zone, which is marked by the low of the 2nd of July, this is where it could become interesting for the sellers, as more of them could start joining in here and potentially driving this one to the downside here further lower, like the areas like the 7,469 or even the 7,369. So of course that's still kind of the downside kind of remains off the table. First, like I said, we will aim for this upside support line, see what it wants to do around there. If it wants to break it, then yep, we'll start considering lower areas. If it holds, then this could be a nice bouncing ground for the buyers, and we could see this one pushing back to the upside again. So keep your eyes on that one. Jumping into silver. Now, I talked about silver a while ago, and basically, as you can see, need to kind of correct a few of the arrows here. But what's kind of currently still in play is the downside channel here that I've talked about when I've covered this one previously. But the only thing is that probably we would need to adjust the lower side of this this channel, and let me just quickly remove this. There we go. It's basically now this. So this is how it looks. Of course, you can see that the commodity managed to break this upside support line. So in a way, we're going to get rid of it in order to kind of push it away from our chart here. But what we're going to focus here on is this downside channel, and we'll see how this is going to play out. For now, of course, this is not looking good for For silver, it seems that it wants to continue pushing lower. The only thing is that we're going to keep a close eye on some of these key areas of support and resistance. So one of the areas of resistance that we're going to be keeping a close eye on is going to be the 1508, 1510, 1508 area. A nice good push above that, of course, could in a way open the path back here to the upper side of the falling channel formation here, but of course for now you can see that it's currently the precious metal is currently balancing around its 200 EMA and around its psychological 15 level. So in a way, it's kind of either one it's up or it's below it or it's above it. So for now, that's why we're gonna sit this one out and wait for a clear break before we take any further action. So in a way, like I said, in terms of the upside, we need to see a nice good push above the 15.10 level, and only then we'll aim for slightly higher levels. But like I said, we will aim initially for this upper side of the falling channel formation, and this area could be around the 15-20-25 zone, so good potential target there. In terms of the downside here, if this falls below this recent low here, or in other words today's low at 14.95, then yep, we'll aim for a possible test here of the lower side of the falling channel formation. So keep your eyes on that one, guys. DXY, the dollar index. Finally, it's getting it's breaking the downside resistance line here, taken from the high of the 23rd of May. And when I was talking about this one recently, and to be more specific, yesterday, basically, I was talking about this one in my Espresso, and I was telling you guys to keep a close eye on this downside resistance line. Of course, even if we get a nice good push above it, still ideally we need to see a nice good strong move above the 97.40 zone. So currently we are seeing that move, and of course for now all of this is looking quite positive here for the dollar index. The only thing is that we're not going to lift this one too high. We're going to only aim for the 97.77, 80 zone, approximately around there. These two are very good potential areas of resistance, so this is going to be our target for now. If this, of course, reverses back down and drops back below this downside resistance line and falls below the 97.18 level, then, well, the areas that we're going to be targeting, of course, initially we will aim for the 200 EMA, but then the target for us is going to be again the 96.88 zone. So previously acted as a good area of resistance, now could take the role of a potential support zone. So, but again, like I said, for now it seems that the downside could be slightly off the table, and it's looking more positive than negative. So let's continue aiming higher. And like I said, but we will only aim for the 97.77 or 80 zones, so keep your eyes on those. NZDCAD. Now, this is something that you probably don't look at very often, but it's quite interesting, to be honest, because looking at this picture here, you can see that it continues to slide lower. It is trading, still trading below all of its EMAs here in the 4-hour chart. This downside resistance line is taken from the high of the 5th of June, so it continues to hold the pair down nicely. The only thing is that the pair is finding good support near the 0.8656 zone. So 56, 55, something like that, approximately around there. This basically territory is seen as a very good support area. So for now, you can see that it's struggling to overcome it. If it breaks below the 0.8655, then yep, this would confirm a forthcoming lower low, and we could see this one sliding further down. But if, of course, this decides to get a nice push today, for example, gets a nice push of the 0.8688 zone, or even you can, if you want, you can round it up towards the 90, 0.8690, then yep, we will consider slightly higher levels. The only thing is that this move higher would be seen as a possible, or should I say larger, as a correction to the upside before another leg of selling, because until we see the rate trading below this downside resistance line, we will remain skeptical about the upside unless it's a small little correction here to the upside. So that's why, guys, Like I said, from the very short-term perspective, if we see a push above the 0.8690, then yep, we could see this one getting lifted a little bit higher, but we will initially only target, let's say, the 0.8715 or 30, and then we'll take it from there, see if it actually wants to travel higher. But like I said, if until it's kind of trading, as long as it continues to trade below this downside resistance line, we will remain bearish. Jumping into another another interesting pair, which is a AUDUSD. Now, I talked about this one yesterday in my traders tea time. Yep, that's correct, in my traders tea time. And basically what I was telling you guys, to keep a close eye on this potential. Of course, this is what I was saying, that this is just an idea that in a way could work out, but as you can see, the AUD USD sold off nicely and traveled lower, but got held here near this 0.8955 level, so, or sorry, 55-53 zone, so approximately around here. Now this is going to be the level that we're going to be keeping a close eye on today. If we see a drop below that, then the next area for us is going to be around the 0.6940, marked by the lows of the 24th of June and the 25th of June as well. So keep your eyes on this one. Of course, if that fails to withhold, then yep, further declines are possible as well. We could aim for slightly lower areas here, areas like, for example, this one, the low of the 21st of June, which is around the 0.69 level. So good potential area of support, but again, we need some clearance here. We need some areas of support getting cleared first before could aim for that area right there. So in a way, also, let's get rid of this. We no longer need this that rising channel pattern here. So basically, also another thing that you need to keep an eye on here is, of course, this kind of tentative downside resistance line taken from the high of the 4th of July here, and in a way this is going to be that line that we're going to be keeping a close eye on, because if we get a nice pop above this, then and especially a nice good push above the 0.6994-95 level, then yep, we will start aiming up towards higher levels, or in other words, towards the highs of last week. So for now, again, this is not really looking good right now for Aussie USD. Let's see if it manages to push further below the 0.6955 level. If it does, then yep, we'll consider all these levels that I've just mentioned recently. And the last pair for this one is the euro dollar, also not looking good. So basically the US dollar is dictating the rules right now. You can see that let me get rid of this highlight area. You can see that the pair is currently stuck around this 1.1215 level. I talked about this one yesterday, basically where I was saying that we need a clear move below this 1.1215 before we could examine the 1.1215 level. We need to see a clear break below, a clear move below this, away from it, and then we will aim for the 111.90 or 80 zones, which previously, as you can see, acted as good areas of support. Because if these two get broken, then I mean, yep, further declines are possible. This is where we could start aiming for the 111 zone, but of course, for now, we're going to be very careful, very cautious. You can see that the pair is kind of balancing around this 1.1215. For now, we're kind of remain cautiously bearish on this one, and like I said, but we will only target the areas around the 1.1190 and 1.1180. In terms of the upside, still we remain with the same idea, with the same position. We need to see a nice good push above the 1.1275 zone, approximately around there, and only then we will aim for higher levels. For now, it seems that the upside could be slightly off the table, unless it's a small correction here to the upside, but kind of in a way, in other words, putting this one until it stays below this upside support line, well, we will continue targeting lower areas. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me later on at my trader's tea time, as always, that's 13:15 GMT time. For now, I hope you have a wonderful trading day, and I'll see you later. Bye-bye.